Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Goglorick and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hi, everyone. Welcome to Leafy Podcast. Thank you for joining us today. I am Tammy, the podcast manager, and on the line we have Jennifer and Brian. That's Jennifer Goglorick and Brian Price from Leafy Legal Services. Jennifer is the COO and Brian is the CEO of that service. They have a very awesome guest with us today, so I'll go ahead and pass it on over to them so we can get the show started. So, hey, Jennifer. Hey, Brian. How you guys doing?
Great. Well, I'm excited to talk to someone. Our guest today has a philosophy of what got you here won't get you there, which I absolutely love. He is the founder of LiveFree Investments. They've raised over $15 million worth of capital. They've done over 120 some odd transactions completed, $75 million worth of transaction volume. Back in 2008 well, he got his kick. He kind of got kicked in the real estate industry and kicked off for his first live-in flip back in 2013, and he's been blowing and going ever since. So I really want to give a great big round of applause and welcome to Logan Freeman with LiveFree Investments and LiveFreeInvestments.com. Welcome, Logan, to the show. How are you?
I'm energized, thriving, and focused. I'm just drawing off of your energy. So keep up the good work, guys.
That's right. She keeps us all going. That's for sure.
That's great.
So why don't you tell us about LiveFree Investments, what you guys do, and what makes you kind of special than a lot of other folks out there?
Yeah. So, kind of twofold here in Kansas City. That's our market, is Kansas City, Missouri. We're a real estate brokerage firm. So we typically help a lot of out-of-state clients with their 1031 exchanges. And I was the head of acquisitions for a $50 million fund here in Kansas City. And what I learned during that period of time, and those were all mostly on single family homes, mind you. And so what I learned during that time was that there's a big need for buyer representation in the transaction process. And so when I moved my license over and started buying and brokering commercial and multifamily properties, I brought this idea to my broker. I said, hey, I'm curious, do folks really work with buyers? She said, nope, we just go after listings. Nobody works with buyers. They're tire kickers, and don't waste your time. And I said, okay, but what if I created a system that I could identify folks who were doing 1031 exchanges that needed deal flow? They needed a team. They needed, attorneys, right? They need attorneys. They need all these different things. And let me help them across the finish line. And she's like, look, you can try it, but I don't know if it's going to work. Well, 12 months later, I had outsold the rest of the whole company. And so she said, well, I guess it does work. And we've been doing that ever since. So that's the first thing, is helping out-of-state buyers, purchase properties and be successful in this market. And then the second thing is really focusing on our own acquisitions. And so we'll be close to over 1,000 units by the end of this year. And those are all on multifamily deals. We've done some hotels and some office buildings as well, but primarily market rate multifamily properties here in Kansas City. So basically helping out-of-state clients either actively or passively get involved with real estate.
Yeah. Okay. That's awesome. Cause I think that makes a lot of sense. Cause I know a lot of people that are trying to get, especially with the pandemic, get out of the big cities and go somewhere and invest in something that actually has some future to it, where the big cities aren't really that way right now.
Yeah, there's been some interesting market studies or just market data about Kansas City in general recently. Mm-hmm. So we landed some really large industrial hubs here in Kansas City on the intermodal side, which is creating a lot of jobs in warehousing, which right now is obviously really good. And then we have the largest concentration of animal hospitals and animal, veterinarian clinics and teaching those folks to do that here in Kansas City metro area as well. So healthcare IT is big too. And so unemployment has been beating the national average. And believe it or not, everybody else in the markets like Texas and in other markets are seeing rent decreases. Phoenix, Kansas City, and Indianapolis are three markets that have been above 3% on their rent increases over the past 6 months. And we're still seeing that happen on our
portfolio. And can you say that again for our listeners? Because you are not the first guest we've had who has honed in on the Kansas City market. Yep. So I want everyone to listen to this who is looking for investments right now. So our clients, anyone who's looking to invest, Kansas City, and what are the other two?
Was Phoenix, Arizona, great market, and Indianapolis. And I have connections in both of those markets that can connect folks with too. But those are all three really great markets that are seeing rent growth, not stagnant rent growth, positive rent growth, beating inflation during the pandemic.
And that's absolutely unbelievable in this market, but it's really great. It really depends on where you're at. So one of the good things about real estate investing, and for us investors, is that we're mobile. You can be mobile of where you do it. Once you have the right structure, and of course, that's what we do is get the right structure, you can kind of do whatever you want. I do want to put a little buzz. If any of you guys are living in California or a Commonwealth state, and you're utilizing an asset holding company like a Delaware statutory trust used specifically as an asset holding company, I want you to listen to him on this 1031 exchange. I know that there's a lot of people who want to put on the brakes. They hear that and they're just like, because there's a lot of moving parts to that, and you need a qualified intermediary to be able to help you, and you have a timeline, and that stresses people out. You don't have to be stressed out with that if you have the right network.
That's
so
right.
Can you talk to me a little bit about your 1031 exchange and how you've been able to help buyers through that process, which can be quite stressful?
Absolutely. And I think that it comes down to two things. It comes down to me having the best relationships and network in Kansas City. That's my job, to know the best attorneys, the best legal, people, but also the best financing companies, title companies, property managers, contractors. When you think about that, somebody coming in from an out of state, maybe California, I mean, that's where 95% of our transactions come from, is California into Missouri. I'm sure it's pretty similar. But anyways, when you think about that, that can get really, really stressful if you have to try to build all of those relationships. So finding a broker like myself who has those connections that you can leverage is extremely, extremely important. So the relationships with the vendors is one. The second is deal flow. It's my job to know what properties are trading, what properties are not trading, what areas you should be in, and what you should pay. And so you need to find somebody that's very active in the transactions in that market that will allow you to leverage that network as well. And so, I always tell folks, if you're thinking about selling a property, identify your markets before you put your property on the market, figure out which markets you're interested in, and then find somebody like myself in that market that can guide you through that process, right? So get ahead of it. Be proactive instead of reactive. That'd be my suggestion.
That is a very, very good suggestion.
Yeah.
It's always better to do that. And of course, having a network is very important, but you don't have to start from scratch. When you're doing it by yourself, you're going to have overwhelm. But if you can connect with the right people and vet them, because, there's more than one person that you can talk to and find
Absolutely.
someone you really like, vet them out, make sure you do your due diligence. And then it just makes everything a lot easier for you, especially on projects like that when you're having to do it. You also, one of the questions you want to ask when you're vetting for someone like Logan is, tell me about your work with real estate investors, especially if you're an investor. There's going to be a very different mindset for someone who's 1030 exchanging for their estate plan, because they just want another buy and hold, and they want something that's going to be a legacy product, or asset for their children. And then someone who's looking at this as an income potential, and they're having to do a 1031 exchange.
Right.
So you really do want to work with someone like Logan and a broker who understands the mindset for that. So whatever you're trying to get out of it, don't be shy to tell them, this is what I'm trying to get out of it. Have you ever worked with someone like me before? How did that go? And have a conversation so you can feel like if they really understand you, because it'll make it a lot better.
Absolutely. Fantastic advice. I don't have anything to add to that. That's great.
Yeah. Awesome. So let's talk about, what are the deals looking like in Kansas City, and what kind of things you're looking for when you are putting a deal together for potential investors? Well,
I'll just talk about a deal that we're working on right now. So, we've got, a portfolio of properties in what's called Independence, Missouri, which is just about 15 minutes just east of our downtown. And, it's 426 units. And here's what's unique about this property, or these three different properties, is we went under contract right around the end of February, right? So kind of before or at the end of February, beginning of March, COVID was kind of a thing, not really yet. But what we did see was scarcity in the market from a competitive standpoint. So we were able to, and I broker deals in this submarket all the time. We were able to look at the comps that were in that area and say, okay, stuff usually trades 55, 56 a door over here. We're going under contract at 49, and across 400 plus units, that equals $2 or $3 million worth of equity on the front end of this. So we saw less competition on the pricing, which was really important. Then we were very curious to see how obviously occupancy stayed, and then collections, right? And so those are the two biggest things right now is what do the collections look like, and what type of debt are you trying to accomplish and try to place on this property? Those are the two biggest things. And so the collections on this have stayed above 92%, and across 400 plus units. That's really, really good. And then actually they started to continually, implement their business plan. So their value add business plan, which was going through the renovations and then placing tenants at higher rents. So our NOI on this property across those units has already increased $52,000 while we've been under contract. So, I mean, that's pretty cool, right?
Yeah, that ain't too shabby.
Yeah. So
Jen can work with that. That's good enough for me. Wow.
That's right. So, I think that we're still trading anywhere between a 6% and a 7% cap rate here in Kansas City, depending on location, obviously the asset type and what the business plan could be. But our cap rates are still pretty attractive. Just when you think about when you can go get debt at maybe 3%, 3.5%. So there's a good spread between the capitalization rates that you're buying properties at and the debt that you're putting on it. And so there's a good spread there to be able to make some dollars and some cash flow here in Kansas City. The other thing I would say that we're seeing a big opportunity and nobody's looking at because obviously COVID, but is neighborhood retail shopping centers. And what I mean by that is not your big box retailers like your TJ Maxx's and your Kohl's and those things. These are Dollar General being the anchor, Family Dollar being the anchor. And then you have a chiropractor, you have a dentist, you have all of these service-based e-commerce resistant tenants in the building. And these things are trading between 8 and 9% cap rates. And the interesting piece about that is that we're able to look back 5 or 6 months now to see what have collections looked before COVID, during COVID, and what are they at right now? So you have data that you can make intelligent decisions on.
That's really interesting because a lot of people talk about, staying out of commercial real estate altogether. They said, don't even touch it. But yeah, with stuff like that, I mean, it is, people got to go to the chiropractor or the dentist and stuff. There's no way to be virtual with that,
You got to buy their tires, they got to change their oil. They got to do that stuff. And I don't know where everybody's located, but I mean, I took my wife out for our 4-year engagement anniversary last night at dinner. We're in Kansas City. You can go to dinner. Sweet. I mean, so, but like I said, I mean, you got to be really careful with the locations and the tenant mix. But when you find the right type of properties, nobody else is looking at that, and that's where you want to really kind of hone in on is where there's less competition because you're not going to overpay for something.
Yeah. I think e-commerce resistant is really a buzzword, but a lot of people didn't understand what that meant. And we're talking about like that came out right at the beginning of COVID. And then people, became this buzzword and now it's like a real thing. Yep. Like, let's see what's going to happen. Because at first it was like, well, this is going to kill small business. But I actually see with supply line differences and people getting so angry, for social issues and other things like that at big box retailers and what they feel is maybe not the best practices for their towns. I think that there is going to be a different wave that's going to push small businesses and towns that employ local people that work together, because that's really the backbone and it's the heart of our country too. So I see it's coming back. I see these things coming back and this push to want to localize. And I am like, so for that, you can be both expansive and local, and there's ethical, wonderful ways to do that actually helps the economy and helps your neighbor and is good for everyone. So totally. I love that we're having these conversations, and I think it's super cute that you celebrate your engagement anniversary.
Yes. Well, when you have two small children, we have a 3-week-old and we have a 17-month-old. Anytime that I can get just with her one-on-one, because I always tell her my 3-week-old boy has stolen my wife away. Like all he does is just hang out with her. So it was really nice to have a date night last night.
Yeah,
that is
great.
good. That is good. Well, you can tell the big smile on your face, and that's really super sweet. If y'all don't see it, y'all need to catch the video episode, because he's got like the blush in his cheeks, and he's the cutest thing on the planet. So that's just sweet.
She's my everything.
So, okay. So where do you see it? Okay. So now we're still involved in like the weirdest time of everybody's life, right? But businesses are still going, investors are still investing, and we still have all this that we're thinking about. So besides retail and e-commerce resistant retail, is there any other trends that you're seeing in your little micro area, which is the Kansas City Metroplex area?
Yeah. I think a few things. The first being that I want to differentiate between the different types of multifamily real estate. There's what I call RBN, or renting by necessity, or RBC, renting by choice. When this all happened, all of the Class A multifamily guys were shouting for joy. Oh, we're going to be fine. Our rents are going to be great. Our guys are white collar tenants. They can pay, $3 a square foot for rent, and they're all excited. Well, as that has started to come down, those folks, this pandemic has hit the white collar now as well. If you look at the trends. So what's happening is those folks are not paying their rents, and they're educated enough to know that they might live in a market that they can lawyer up and say, hey, I'm not paying my rent. So what's very interesting is the push from what I'll call Class A multifamily back down to the B and C class multifamily properties, because those folks are out there, they're essential workers, and they're still paying their rents. And so, that's one trend I would say is my sister is moving back from Kennewick, Washington, or Yakima, Washington right now. And she moved back, and we have all of these new deliveries downtown, and they're all Class A, and they're all highly amenitized. And guess what she got? She got an upgraded from a studio to a 1-bedroom. She got 3 months free rent, no amenity charge, and free parking for 3 months. Now that is a big indicator to me, saying those guys are doing everything that they can just to get their rents up, just to get their debt service, covered. And so I think there's a big push now back to affordable and, rents that are $1.50 to $1.60 a square foot here in our market, not $2.50 and $3. And people are starting to say, man, I think I might want a little bit more space, And so we've always focused on those larger units with garages. People love garages here. They got cars. And so we've always focused on that. So that's one big trend. I think the second trend, that we're seeing right now is, I don't know how to put this, but it would be, we see folks that have traditionally been in the equities and the bond markets, just from an investment standpoint, saying, I wonder if there's something else, right? Especially folks that are 55 to 65, and they're saying, oh my gosh, I just lost 33% of my portfolio. What can I do that's not going to be, tangent on what the stock market is happening? So we've been educating. We've been doing a lot of work just talking about the different, hedges against inflation, right? I mean, you think about that. You think about the devaluation of the dollar with the Fed printing all of this money. So that's another thing to keep in mind. And you're seeing, obviously, a lot of folks run to gold and precious metals right now because they're worried that the dollar is not going to be worth anything. I think the dollar is going to be worth, $1 for now. But at the same time, we've been seeing a lot of folks that maybe weren't interested in real estate previously say, hey, I didn't know I could invest in real estate passively. I thought I had to deal with toilets, tenants, and trash. And I'm like, no, you don't. You can invest with somebody that deals with that stuff for you and get the same benefits. So I think the second trend that we're seeing is that conversation is happening a lot more, and more folks are open to it as they've seen kind of some of their investments go to go to nothing, to dust, to fairy dust.
Yes, I heartily agree that there are many people now who are conservative by nature. That, you know, they walked into to get their W-2, or, you know, and they said, okay, you got these 5 funds. Here's the conservative one. Here's this. Just pick one. And now they're hearing more about the things we talk about all the time: solo 401ks, starting your own business, being able to be your own bank and aggressively make your money work for you. And they're like, hey, I didn't even know I could do that. And then is that legal? You know, it's weird how there's this limiting belief that pushes back against being abundant or letting the law work for you, right? And that is a very limiting belief. So get that out of your head and realize that there are laws that are there to help you. They want you to have a savings. The last thing we want is for people to have to live on Social Security. It's not going to be there anymore. And the government does have programs for entrepreneurs and solopreneurs to be able to save and to build a retirement, because that person is a benefit to society. You're a benefit to capitalism or whatever we end up with in this huge upheaval. People who are able to buy and add and keep themselves healthy because they have the income to do so and eat yummy, healthy food because they can afford to do so, are a lot more attractive than the people who lose everything in a public market. They thought they did well, and then they end up on some system.
Yes,
you know, and so utilize these things. This is where the push is. This is what the government's trying to do to help people educate yourself and then put these things into place. Yeah.
And also to note, the Fed actually is, since 2008, they actually are investing in mortgage-backed securities too, which was part of what their new thing that they have. They're not just printing money like they usually do. So with bonds, so it's kind of another thing too. And the Fed is kind of investing in real estate as well. So in that case, it's a unique thing that they found in 2008. So that's kind of another thing as they print more and more money from this pandemic. They're likely going to get into securities as well, which will have an impact on the real estate market.
Yeah, one last thought on that. That's a great point. Is that I just wrote an article on LinkedIn about this. The head of the SEC is pushing very hard for more flexibility for people with their solo 401ks. And they want them to be able to get into privatized investments like real estate, like businesses, all of those things. So, we're seeing some trends here, especially during the COVID. I mean, if the head of SEC is pushing for that, I mean, that's a pretty interesting, what I call clue in the news, right? The clues in the news.
Absolutely.
Yep.
Okay, guys. So we've been talking to Logan Freeman. Logan is with LiveFree Investments. You can go to livefreeinvestments.com, just the way you spell it, no spaces. And you can find out all about him. You can see him on other podcasts. You can read his great quotes. Like one says, knowledge alone is not power. It is potential power. Knowledge plus massive strategic action equals power. Like, Logan has like a lot of really good ones on there that I'm probably going to end up stealing and not realize I've stolen them. And so before you know it, Logan, you're going to hear someone say, oh, I heard this girl Jennifer say this great quote. And you're going to be like, that's my quote.
I love it. I love it. I grant you access to anything that's on there. So.
Don't give me free rein, Logan, because I will take it and I will just run like a chicken with its head cut off. Anyway, awesome. So we're getting to the end of things. Can you think of anything else that maybe some potential investors, whether or not they're brand new or they're just looking to diversify their already large portfolios, might get from what you're doing right now there in the Kansas City area?
I would just say it's time to take control of your financial future. And that starts with education. So, a lot of folks get really scared when we start to talk about economics, but you have to understand the fundamentals or what's going on, not only with the economy, but the financial system that backs our economy. So it's super important to know that those are not one and the same. And so macro trends that are happening, how those are affecting the micro markets that you live in and that you can invest in. So find somebody that's an expert, and then there's so much education out there. You guys do a great job. There's so many podcasts. Just Google and start, instead of watching 400 episodes of Netflix, start watching, 399 in one podcast a day. So it's time to
great advice.
Yourself and make some really good financial decisions, because it'll help you in the future. So that's all I would say.
Well, you've said a lot, and I just actually love, Logan, your spirit, and you just have all this energy, and I just wish you all the best luck, and I hope we have you on again.
Thank you so much.
Tammy, we're going to have to end it before I just like grab him up and I adopt him in some way, and him and his lovely family. Because I just want to. Thank you again, Logan.
Thank you, guys.
Thank you, Logan.
Tammy, tell them how they can reach Logan and find more information and all that other good stuff.
Absolutely. Yeah. Thank you again, Logan, for all the great advice. And we will have everything of Logan's on our show notes. So anywhere you can find us at Leafy Legal. We are on all of the podcast platforms. We're all over social media. So we will have all of Logan's links there. And thank you again, Jennifer and Brian, for hosting for us today. And we hope to see everybody next time. Have a great day. We're out for now. Bye-bye.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit LeafyLegalServices.com. They are waiting to hear from you. LeafyLegalServices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.